Hello, my name is Hatim Yago. I'm a health master student. I'll be talking about the merits of the social health funding as a better way of funding health system compared to tax-based funding. I'll be talking about the modes of health financing, what is tax-based financing, what is social insurance financing, what are the differences between the two systems, how the social health system can be better than the tax-based one, and what are the data that we can find that can support that. Um, Private finance, I will not be talking about private financing as a way of funding health systems. The WHO define health as a state of complete physical, mental, and social well-being, and that's very central to all the health delivery systems. So health system can be funded in either privately through out-of-pocket payments or private health insurance, or it can be funded publicly using a tax-based system called the Beveridge system or the social insurance system. The Beveridge model comes from Sir William Beveridge, who laid down the first outlines of this new health system in the UK after the Second World War. Health was seen as a right and not a privilege, and every citizen is entitled for it. The health system is owned and operated publicly by the government or by governmental institution and is funded through governmental revenues and tax incomes. It's adopted in the UK, Ireland, Sweden, Australia, and Canada, and many other countries. The Bismarck model, on the other side, is introduced by Otto von Bismarck in the 1880s in Germany. Compulsory contributions that are payroll contributions from employers and employees feed into a single Cygnus fund that covers all the workers in the certain firm or in the certain company or in the certain state. Providers and payers are usually private, but the process can be regulated by the government, and it has been introduced really to improve the health of the workers and improve their productivity. At that time, universal cover wasn't really an aim for this model. It's implemented in Germany, France, Switzerland, and Japan. The two systems can differ in the way they raise the funds, as we have seen, the way they deliver the system and the health delivery, and in their outcomes. If we look at the tax-based system to start with, you need a well-designed and efficient taxation system to minimize the tax evasion and the loss of funds, which can be catastrophic for delivery of health. And this is really happening in a very well way in the NHS system, where they have a very good taxation system. Generally, in the beverage countries, government tend to spend less money on health, and the funds might not be sufficient to provide a good quality care that will be sufficient for the public, and it's most of the times actually seen as a substandard care due to many reasons, as we will see further. And the government usually respond to that by asking for more taxes, which might face a lot of resistance by the public. On the other hand, in the social insurance funding system, people are usually more willing to pay their contribution because it goes directly to their health and to their colleagues' health, rather than their willingness to pay taxes. So it's easier to raise the funds. People also are more likely to show solidarity with their work colleagues than with the general public. There are certain issues that comes in with within the delivery of the tax-based system that makes it an unfavorable system. One of the main criticism of the beverage model is the long waiting times and the long queues for services. People have to wait longer to get their scans done or the investigation done or even to get procedures done. And it can be very lengthy process, can take up to a year or even more. That can lead to a lot of dissatisfaction, and patients might spend out of their money, of their pocket, to try and bypass the long waiting queues and go privately to purchase health services. It can also be influenced very adversely by politics and politician demands. As the funds are raised and governed by the government dictates really where the funds goes and how much goes into health. And this has been seen very clearly in the example of Finland when it went to a financial hardship in the downturn time in the 1990s. A lot of the money was taken out of the health budget, and even after the economy recovered, we haven't seen that money coming back for long years down the road. This has led to the concept of earmarking, and that essentially means that a tax or a money that has been raised for a certain purpose or a certain service, say for example health, should only be spent in that category of service, so only for health. This can improve the public trust into the system and the allocative efficacy of the expenditure by linking the taxes to the benefits received. It also can reduce the patient public resistance to taxation as they know where this money is going into. Other issues that we can see in the tax-based system that it's a monopoly. So there's low competition and there is no incentives to increase quality and volume of care. You question whether it's applicable to low-income countries. It's very difficult to see that happening because it's low income, low salaries, and so low tax rates, not enough to really meet the health demands. So another source of funding should be found. Patient satisfaction tends to be lower in those systems, as we will see later, and most of the people actually regard it as not a good value for money. New technologies and new drugs or medicines tend to take a longer time to be introduced in such a system because it comes with its own cost, and funding those new technologies can be difficult and sources might not be available. So again, it might increase the out-of-pocket payment as people might have to go somewhere else to purchase such new technologies. How can the social insurance funding then become a better alternative to the tax-based system, which has a lot of faults? Now, the advantage of the social insurance system that it's a wealthier system. It has more money into it, more money is injected into the health. Earmarking is easily applicable. There's less out-of-pocket payments. There's a less risk of catastrophic spending, and it is less affected by political demands and financial downturns. But it's not free of disadvantages. Concerns about it comes from some certain issues in the system. The first one of them being adverse selection, and that happens when sicker people tend to buy health insurance while healthy people tend not to buy it. So insurance companies and insurer firms tend to become disadvantaged by that, and as a result of that, they try to do what we call a risk selection, and it's a company behavior where insurers try to enroll more healthy people into their plans compared to unhealthy people or people who are more likely to demand health care. There's also higher cost in this system, and there has been a potential to increase high unemployment rates. How did the social insurance system and the countries that adopt this system, how did they actually try to minimize the effect of those disadvantages? First of all, firms and insurers were pushed to apply minimum standards that all plans must have to cover basic needs for the patients, and then patients are free to purchase higher plans that have more services and better service into them. This acts as a safety network where everybody will be served a minimum standard. Open enrollment is another way to combat risk selection. So no customer should be rejected. Everybody should be able to apply for every plan, regardless of his risk of sickness or becoming unwell. Community rating is being used to minimize risk selection, and by community rating we mean that all the employees in the same firm pay the certain amount of contribution towards the sickness fund, whether it being younger healthy people or the less healthier people, and that leads to a risk pooling and increased solidarity within that business or within that company. Compulsory participation is a way to limit adverse selection. So no people should go uncovered. Everybody should apply for a plan. More competition within this system, certainly more so than the tax-based system, can lead to a better affordable plans and a higher service quality, and it might even help to achieve universality. Now, in the next couple of slides, I'm going to talk about this landmark research article that was published in 2007 by Van der Zee and his colleagues, and it's titled Bismarck or Beveridge, a beauty contest between dinosaurs. Certainly, what they try to do is to divide the European countries, the Western European countries, into two big groups. Those are applying the social health system and those who are applying a tax-based NHS-like system. And they looked at certain indicators: health outcomes, cost of the service, and patient satisfaction. If we look at the overall mortality rates, we see that the social health system tend to have a lower overall mortality rates and continue to be so over the time, although the differences between them tend to minimize over time. Infant mortality rates, although being higher first in the social health system countries, but the two graphs tend to merge around 1985, and then there was no significant difference in infant mortality rates from that onward. If we look at the total expenditure per capita on health, it is certainly in favor of the social health system where there's more money spent into health. Whether that is good or bad, that's something else. Total health expenditure as a percentage of the GDP again tend to be higher in countries with a social health funding system rather than the tax-based system. Patient satisfaction tend to be higher in social health system, where the percentage of people who report having a high satisfaction rate or fairly satisfaction rate are around 70% in the social security system, compared to a rate of 50% only reported being very or fairly satisfied with the system in the tax-based NHS-like system. So there's at least a 20% difference in the satisfaction rates. So this study really showed that the social health system performed slightly better in overall mortality, no significant difference in infant mortality. Social health systems tend to be more expensive. Tax-based systems tend to have a better cost containment protocols, and countries with social health systems tend to have a better satisfaction rates compared to the NHS tax-based systems. So what do we come up with after this? I think there's no one size fits all. Not no one system can work perfectly well. There are draw and flaws in each system. A lot of the countries try to counteract that by mixing the two systems to come up with either a beverage system with a Bismarck flavor or a Bismarck system with a beverage flavor, and that can certainly be the way to go in the next future to come up with the better health plans to serve our community in a better way. And by this, I will conclude my presentation. Thank you very much.